Right, Mohit, I'm just going to connect with the management of Fortis Health as well, talk to them about their earnings. But before that, on the charts of Fortis Healthcare.
Well, Fortis is broadly range bound between levels of 150 on the downside and about 195 on the upside. Yeah, I know it's a big 45 rupee range, but it's broadly in this range. And until it doesn't break out above 195, 198 on the upside with some kind of momentum or volumes, it will broadly be range bound. So the best way to trade it is buy it around the 150 zones, 155 zones, and then sell it around the 190 zones.
All right. In fact, a mixed quarter coming in from Fortis Healthcare. Their total income is up by about 11%. The profit has slipped by about 64%. Margins, though, have expanded by about 200 basis points. Other income is down 54%, so that could have dented the profit figure over there. Finance cost has gone up by 53%, so a double whammy coming in on that. Hospital business, the revenues are up 11%. The revenues for the SRL business also up by about 12%. Joining us on the show to shed more light on that, BhavdeepSingh, the CEO at Fortis Healthcare. Mr. Singh, thank you for joining us on BTVi. Just put these numbers in perspective for us. Other income down, finance cost has gone up, but except for those, operationally, how has the performance been for you?
Good afternoon. Thank you very much. Actually, we feel we've had a very, very strong quarter. The numbers you've just alluded to, I think there's one big one-time. There was a Forex gain last year, 50 crore. So that impacts the number when you start looking apples to apples. Actually, the business has done quite well. So if you look at both businesses, the Fortis Healthcare hospital business and the diagnostic business, both have had a revenue increase of 11% for the first quarter and for the first half of the year. The margins are improving. The SRL margin is at slightly shy of 24%. The Fortis margin, EBITDAC, which is our EBITDA number minus our trust fee, has come in at almost 17%. Occupancy numbers have been very high, and our EBITDA has actually doubled. If you look at the Fortis hospital business, we're sitting at double from last quarter as well as last year, same quarter. So I think that operationally speaking, the business is, we actually see this as a breakout quarter. Our occupancy numbers, as I just alluded to, have been north of 80%. We continue to expand in terms of a number of beds. We're adding beds as we go forward, and we're very bullish on where we are. We feel fortunate. We have some of the best doctors, some of the best nurses in the country, some of the best diagnostic technicians, researchers, and I think the future looks very, very bright, and we anticipate continued solid numbers going forward.
So if I'm hearing you correctly, this is the kind of run rate that we should expect both on the margins front as well as the growth figure. Right.
Continue to build tremendous loyalty with our patient base, with our customers as well. So I think, yes, I think the numbers we're reporting today, that's certainly what we expect going forward. And if anything, I think as quarter on quarter, we expect to see further growth as well.
Right. Mr. Singh, if you can hear me, a little bit of a troubled line with you over there, but if you can hear me, just want to get your perspective on the occupancy levels at your hospital business right now, as also the average revenue per bed.
So I can hear you fine. About 81-82%, which is, if you look at the industry numbers, were about 5 or 6% higher than most of our peers. So certainly we feel very encouraged about that. And the good thing about the occupancy is that we have a pan-India presence. We're in Tamil Nadu, we're in Karnataka, we're in Maharashtra, Punjab, Rajasthan, obviously the NCR area, etc. as well. But if you look at our occupancy growth, is fairly consistent in terms of growth numbers, and we're recording good solid occupancy numbers, and it's a good the mix of treatments from a medical perspective, whether it's oncology, cardiac sciences, orthopedics, nephrology, it's evenly and well spread between the various clinical specialties that we have. So I think occupancy at the end of the day, that's where everything starts, right? We actually have to have people inside the hospital, and then the treatment work starts. So I think we feel very good about where we are. From our average revenue per occupied bed,
We are about 1.38 crores per share, which is slightly above last year. And again, if you look at the marketplace in general, if you look at our peers, that's a very healthy growth number. And what I'm most encouraged about is that it continues to grow. And that's driven by the clinical specialties. We've made a huge foray into oncology. We're becoming one of the leading transplant centers in India. We have the largest cardiac transplant program in the country. We have one of the largest liver transplant programs as well. So I think all of those things contribute to it. So indicators all moving forward. The other indicator that we look at is average length of stay as well. And we want to keep that under 4 days. That gets impacted a bit in this time period that we're having right now because of dengue and chikungunya. It also gets limited a little bit by the transplant activity because we do so many transplants and the length of stay is really longer. So across the board, indicators all good and they are quite well when we look at our years in the industry.
Fair point. Mr. Singh, I would have ideally liked to have a longer chat with you, but an extremely patchy line over there. It's very difficult for us to hear what you're saying over here. But good luck for the quarters ahead, and we'll definitely connect the next time around and get a better perspective of the performance at Fortis Health. The management saying a couple of one-time hits that's impacted the bottom line, but as far as business verticals go, it's been a good performance from them. Let's move on to the other big story of the day. Of course, the back and forth between Tata Sons and the ousted Chairman Cyrus Misri continues. This time Tata Sons coming out with a letter, in fact saying that they have received many emails and calls post the